Let's get straight, though, to the jobs number. A bit disappointing. Payrolls down by 23,000 in July. Joining us with his first reaction here at Post 9 this morning is Torsten Slok, chief economist at Apollo. Good to see you, T. Happy Friday.
Thank you.
Any hair on this number that makes it less reliable, or is this a real picture of what's going on?
Well, there were two underlying problems. One problem was that there was a very negative print, 50,000 in local government education. That's a little bit unusual. July, summer vacation. Could there be something here going on that this was just a seasonal adjustment problem? Another quirk was in the leisure and hospitality data, which also had some numbers that looked like maybe the World Cup was also playing a role in holding down the headline number. So all those quirks aside, the bottom line is still that, well, the unemployment rate did decline. There was something with the participation rate. And if you take those quirks out, you could get a number that's not too far away from what the consensus expected. So the bottom line is, I think it's fair that the market is saying rates have to go down a little bit. Maybe Fed hikes have to be pushed out a little bit. But for now, the key point we're waiting for is, of course, CPI next week, which will then tell us what is on the agenda for the Fed when they go into their September meeting.
I'm thinking about revisions, negative, wages, weak. And that household decline. I mean, doesn't that in general point to a softening picture? Not to mention ADP, for example.
It does indeed point a little bit weaker, but the key issue again is, well, how big are these quirks? Are they just small things where we don't really need to worry about it? Or is it actually something that's so big that it could have been a more normal number if we had not had these unusual statistical things? So yes, you're right, Carl. We should view this, which is what the market is doing, as maybe things are a little bit weaker on the labor market. And that's why we're back to watching, well, now it is really inflation, because the labor market has been definitely the backseat of the car here for the Fed. Most of the focus has been on inflation.
Without Chairmain Warsh's forward guidance, how important will Jackson Hole be, and what do you expect he'll say there that could provide some more clarity on the path forward?
Well, I mean, Warsh has been very unfairly treated because a lot of people think that forward guidance should be removed. This is not only Warsh. This was also Bill Dudley has been saying this. There's also papers by Jeremy Stein, others that have argued actually for years that removing forward guidance is a good idea. So that's why I do think that we will get an opportunity in when we come to August and listen here in a few weeks to what Warsh is saying. And I do think we will and probably get more clarity around what is the view on all these things that the committee has been discussing on the economic outlook, on forward guidance, because this is probably a good opportunity for the FOMC and in particular for him to come out with his views.
President Trump weighing in on the Fed's decision and, sort of being a bit more restrained on where he sees rates going and whether rates should stay steady or go up. What did you make of that?
Yeah, this is a very, very important recognition by Trump and, of course, by all of us that it is not only Chairmain Warsh alone who makes these decisions. There are 19 members on the FOMC and 12 of them vote, and Warsh is only one of those voters. So the 11 other voters are also very important, and the last meeting was 9 versus 3. So therefore, the recognition by Trump that this is a committee decision, this is not Chairmain Warsh who's driving the train alone, that is a very important starting point for a conversation about when will the Fed move. Because at the moment, the market, before the employment report, was saying the Fed would hike in September, and now, of course, the market is saying, well, we pushed that out a month, and now the hike is likely going to come in October.
We were talking during the break about your chart work, which has been